Hello and welcome to this edition of Money in Motion video blog. This is Dan Perkins from my car on the road. Excuse me. I thought I'd just take a moment to touch base with the extreme volatility that's taking place this week. Many of you saw yesterday we were at one point we were down 265 points and we closed the day almost even. So a 520 point swing in one day. I have been talking to you about volatility. I expect it to continue. Most of the volatility that took place yesterday was a result of the devaluation of the yen and the collapse of the Chinese market. This is a big problem overhanging the markets as to what's going to happen in China. Such an important trading partner for so many countries of the world. That kind of a decline is significant. So our indicators, the 10-year Treasury is about 218, not much change. Gold's a little over 1100, not much change. And the dollar is stable, but not really rising at the moment. So I expect this market to continue to try and figure out what's the direction of the Fed and what's the direction of the market. It just seems to me that the volatility is there, the uncertainty of what's going to happen. I think the Hillary situation yesterday with the confiscation of her server and the records also is putting some questions in the marketplace as to who likely is going to replace her if she gets into difficulty. The surge of Trump after the debate, a lot of turmoil going on in the country and in the world. But things seem to be holding on okay. I did want to mention that I told you some months ago when oil hit a low of around $42 that I said I thought we eventually would have to go back and test the low and see if it could hold. We went back and tested that low yesterday. We did bounce off it and closed up a little bit. We're up a little bit this morning. We may have further tests of the previous low, but right now it looks like it might hold. Interesting to note that the Saudi Arabian government came to the debt market for $27 billion. What's going on is while Saudi Arabia has a significant amount of reserves in the ground, the current price that they're getting for the crude oil is putting a significant crimp on the operating budget of the country. And in order to be able to make sure they can continue to support their citizens and pay their bills, they needed to go to the debt markets and borrow, and they borrowed $27 billion at one shot. That would indicate that if Saudi Arabia has to go to the debt markets because they're not generating enough cash flow based on the price of oil, that other countries are in even more dire straits. So that the decisions that are going to have to be made about what to do with the resources, the limited resources of the governments, will have an impact on what they can spend for the purposes of importing from around the world. So, tough times. Hang in there. Dividends are still being paid, and I continue to watch the markets, and I apologize for doing it from my car, but I felt it was important to get to you. So if you have any questions, please feel free to give me a call. This is Dan Perkins, and thanks for watching.